Malaysian equities might be close to a turnaround, Bloomberg reports, citing Macquarie Group. The investment banking group sees the KLCI surging to 1,800 in the base scenario, or even reach 1,900 in the bullish case. This would be on the back of reforms at GLCs, more political clarity and fiscal stimulus. The benchmark composite closed at 1,637.4 today. Quoting Macquarie, Bloomberg says, fiscal stimulus is returning with the revival of the ECRL and Bandar Malaysia. Macquarie expects similar developments to happen with MRT3, the KL Singapore High-Speed Rail project, as well as in the telecom sector and within the Petronas group of companies. Meanwhile, oil prices are exceeding targets and liquidity is ample. It said government policy-centric catalytic news flow alone could allow the KLCI to recover to 12-month highs of 1,850. The main risk remains Malaysia's potential exclusion from FTSE Russell's World Government Bond Index. MMC Corp has confirmed the termination of Borneo Highway PDP's role for the Sabah portion of the Pan Borneo Highway. It says it received the notification from the government last Monday. BHP is 40% owned by a JV between UEM Group and MMC Corp, which gives MMC an effective 20% stake in BHP. The remainder 60% in BHP is owned by Sabah-based Warisan Parang Construction, which The Edge Malaysia Weekly previously reported was perceived to be connected to Sabah UMNO and former Chief Minister Tan Sri Musa Aman. In a Bursa filing, MMC said the termination is on the grounds of national interest and will take effect 5 months from April 22nd. It said the termination is not expected to have any significant effect on the group's earnings for FY19. Bursa Malaysia saw its first quarter 2019 net profit fall by 26.5% year-on-year to 46.86 million ringgit, due mainly to a drop in operating revenue. Quarterly revenue shrank 16% to 126.53 million ringgit. Bursa says while first quarter 2019 was a weaker quarter, this was consistent with the prevailing domestic and global developments, which include concerns of slower economic growth, weaker corporate earnings and parboil prices. However, market sentiment is seen to be improving, reflected by the positive momentum in monthly average daily trading value and monthly average daily contracts. CEO Dato Muhammad Umar Swift points out that while the benchmark composite has weakened, small and mid-cap indices continue to show a positive trend. The revival of the ECRL and Bandar Malaysia is also expected to act as a catalyst to stimulate the broader market. Public Bank reported a 0.36% increase in first quarter FY19 net profit to 1.41 billion ringgit on lower loan impairment allowance and higher investment income. In a Bursa filing, the lender said its quarterly revenue also inched up from 5.35 billion ringgit to 5.57 billion ringgit. On prospects, Public Bank says ongoing demand for financing in residential properties, passenger vehicles as well as lending to SMEs will continue to support the bank's growth. The group said it is well positioned to capitalize on opportunities in the residential property financing segment, given its focus on home mortgages for own occupation and the broader mass market. Meanwhile, it will continue to pursue growth opportunities by developing proactive marketing strategies backed by competitive pricing and product packages. Lotte Chemical Titan's net profit for first quarter FY19 slumped 77.1% to 55.83 million ringgit, no thanks to a margin squeeze from a fall in product selling prices. Revenue dipped 2% to 2.17 billion ringgit due to a decrease in average product selling price. On its prospects, LCT says crude oil prices have been increasing since end 2018 and is likely to extend until the end of this year. It says new US sanctions on Venezuela and removal of waiver on Iranian crude oil exports will further reduce global crude oil supply. Moving forward, crude oil should remain volatile. Domestically, the group expects new additional capacities to create short-term supply and demand imbalances. The additional supply is expected to be gradually absorbed by the high consumption growth in the Southeast Asia region.